Hello, landlord's insurance. You may be thinking of either not selling your house and renting it out because you can't get the money you want for it at the moment. You may be thinking of investing in it because maybe property prices are low. Either way, if you're getting into the property market and you're going to be renting your property to anybody, you will need landlord's insurance. I can't make this any simpler. If you don't buy landlord's insurance, one of the most valuable assets you will ever own will become a massive could become a massive liability for you. If you buy a flat at say £300,000 in the centre of London and you put tenants into it and that flat is damaged whether by water, by fire or by the tenants, and you don't have landlord's insurance in place, you could be liable not just for the rebuild value of that flat, which could be the full asking price of £300,000, it could be more, it could be less. But if that flat then, if it burns down, it damages 3 or 4 flats either side of it, you could be in the millions of pounds of liability. If you have landlord's insurance, well then you're covered for that and you can sleep at night. You need it. It's a business decision. When you go into renting out property, you're doing it to make money, and you cannot make money without landlord's insurance in place. The good news is that landlord's insurance does not have to cost a lot of money. There is a very competitive marketplace out there, and if you go to www.thepropertyinsurer.co.uk, you'll find at the moment there's a price guarantee on landlord's insurance, so you will get the lowest price possible with some absolutely excellent cover. So that's what you need to do if you're going to be a landlord.
Hello, I'm Nick Rossington, Director of Financial Services for the Buy-to-Let Mortgage People. Today I'd like to discuss with you the importance of protection for mortgages. And when most people think of mortgages and think of protection, it's traditional to think, well, I've got a residential mortgage, and for that residential mortgage, if anything should happen to me or my spouse, then we need a life cover policy in place so that anything happens to one of us, that the mortgage is paid off. That has also extended into critical illness, so if people have certain critical illnesses, then there's, if they have the necessary policy in place, then that mortgage will be paid off with a critical illness policy. People have tended to traditionally think of protection as being for a residential mortgage, but what we are finding, and certainly what I'm recommending, is that for my clients who are building up a property portfolio, and whether that's 1 property, 2 or 10, their aim at the end of that, as they're building their portfolio, is that they want to have an asset that they can pass on to their family or give them an income during retirement. And really, a lot of people, as they're building a portfolio, are looking for financial freedom because they see property as a means of gaining financial freedom. Or it could be that they're just thinking, with that 1 property, they just want to have 1 investment that's going to give them some income in retirement. Now, I think the importance for protecting these properties with a life policy is of paramount importance. I was with a client the other day who's actually building up a portfolio, and his aim, in 20 years' time, he wants to have £1 million of property that he could eventually pass on to his family. Now, if anything happened to him during that, as he was building up his portfolio, then he would leave his family with outstanding mortgages. He certainly wouldn't be leaving them with £1 million once all the mortgages were paid off, and also the hassle of maintaining those mortgages and sorting out all the sorting out with all the lenders and the rates and changing mortgages over, and you name it, all the struggles his spouse or family would have if anything happened to him. But with a life policy in place, and life cover is relatively cheap, it's never been as cheap actually, it's a very cheap thing to put in place, but if his aim is to build up a portfolio worth £1 million, then to have £1 million of life policy in place means that if, as he's building up that portfolio, anything were to happen to him, then all those mortgages will be paid off. So the family would just have the properties that could be generating income without actually worried about the mortgages and worried about selling them and not being able to gain from those properties what the original intention was. So I think it's really, really important now to protect the policies with life cover, or it could be that even for a critical illness cover, you may not want to protect the whole of the properties or the whole of the portfolio with critical illness cover because it's more expensive, but just having £20,000 or £30,000 of critical illness cover means that if you are likely to have a critical illness, it just gives you that peace of mind to know that the mortgage is going to be paid for, you're not going to have to worry for income over a certain period of time, and that before you get back on your feet and decide what to do with the properties. So Very, very important in terms of financial planning is seeing the overall goal, and what we do as financial planners is we help you source the properties, we find the mortgages for you, we help you find the tenants, but critically important in all that process is helping you protect, because planning and protecting your portfolio is the only way you're really going to get the financial goals that you're aiming for. And why take a risk when life cover is so cheap, and just talking to us and putting in those policies in place will make sure that you have peace of mind and can fulfil those financial dreams that you've got. Thank you. I'm Nick Rossington, Director of Financial Services at the Buy to Let Mortgage People.
Temporary home insurance. Finding yourself in a situation where you are going to be absent from your home for an extended period of time creates a set of circumstances that need to be addressed. Your home insurance cover must be at the top of the list. The reason being is that a traditional home insurance policy does not provide cover for extended absences over 30 days, leaving your property unprotected. There are many good reasons why your home is going to be unoccupied for over 30 days at a go, and they are all why you don't want your home to be uninsured. One of the reasons could be because work is sending you away from home to perform your duties for a period of time. Or you may find yourself having to be a caretaker for a parent who's recovering from a hospital stay, and it's going to be a few months before she's well enough to be on her own again. Another reason may be that there is a large construction project being done to the property, requiring you to move into temporary lodgings until the work is done. Maybe you have purchased a new home and haven't sold the previous one yet, leaving it empty. A family member has passed, leaving their home empty, and probate on the property has yet to be performed. All of these situations require temporary home insurance to cover the structure while its owners are absent. There are good reasons as to why you need to have temporary home insurance cover on your residence. Just about anything can happen to the structure, including flooding, fire, burst pipes, or adverse weather conditions. Unoccupied homes are a tempting target for those intent on malice and mayhem, such as burglary or vandalism. Once the criminal element has figured out that no one has been in the house for a long period of time, they move in to do their illicit business undisturbed. Their activities are going to leave your home damaged and personal items removed. None of these scenarios are covered by your standard home insurance policy if no one has been living there for more than 30 days. The carrier is not going to pay you much mind when you tell them that your extended absence is the reason.
Come on in. It's a little chilly. 1 second. As a homeowner, one of the things that I keep telling clients all the time is that it's very important to do a review of your insurance policy at least once every 3 years, if not sooner. People think that insurance contracts are static for some reason, and actually they're not. Changes always seem to be happening onto policies, and that's the reason why every renewal you get this nice little thick paper and it gives you all this explanation of something. And let's be honest, not many of you guys want to read that thing all too often. But it's my job to care about those things. It's my job to read them and to make sure that it's taken care of. But the number one problem that happens, the reason why you need to do those reviews, is that about every 3 years, the value of your home sometimes can actually be more than the value of the policy being given you for your coverages. And so unless your insurance policy is protecting you for that kind of inflation, it's something you definitely want to make sure that you're covering yourself for. So the only thing that I'm asking for you to do as your future insurance agent is to give me the chance to review your current contract and then offer you my policy and replacement. Let's see if we can be able to do business together.
Home Insurance Buyer's Guide. Our homes and the things inside of them are very important to us. whether we live in a small flat or a large detached house. That's why getting the proper home insurance is so important. There are many variables in play when it comes to finding the right home insurance, and at Credit Now UK we can help you find the insurance company and policy that will fit your needs. Whatever your home insurance needs are, you'll want to compare both the cover available as well as how affordable the premiums. With Credit Now UK it's easy to sort through all the options and find the policy that fits you. We can also help you think of ways to save money on your home insurance, such as combining different policies, installing locks, alarms, and proper insulation, and taking care of minor repairs on your own, rather than making a claim and voiding your no-claims discount.